Welcome to our CFP exam prep discussion. Today we're diving into a critical tax concept that frequently appears on the exam: hobby losses and profit motive determination. Let's decode this important tax topic that often trips up candidates. Many taxpayers engage in activities they enjoy, like photography, crafting, or trading collectibles, hoping to make money. The IRS differentiates between legitimate business activities and hobbies through the profit motive test. While all income must be reported regardless of classification, the deductibility of expenses varies significantly based on whether the activity is considered a business or hobby. A common mistake CFP candidates make is assuming any activity that generates income automatically qualifies as a business. The IRS actually looks at 9 specific factors to determine profit motive. Understanding these factors is crucial for the exam. The factors include whether the activity is conducted in a business-like manner, the expertise of the taxpayer, time and effort invested, history of income or losses, financial status of the taxpayer, and the element of personal pleasure. Let me break this down with a practical example. Consider a financial advisor who's also an avid photographer. She occasionally sells prints at local art fairs, but hasn't made a profit in 5 years. She maintains minimal records, has no business plan, and primarily photographs subjects she personally enjoys. Despite generating some income, this would likely be classified as a hobby by the IRS. The key concept breakdown for the exam is understanding that hobby income must be reported on Schedule 1 of Form 1040 as other income. Prior to 2018, hobby expenses were deductible as miscellaneous itemized deductions subject to the 2% AGI floor. However, after the Tax Cuts and Jobs Act, hobby expenses are no longer deductible at all through 2025. Another frequent exam mistake is confusing the ordering rules for hobby expenses with business expenses. In business activities, expenses can exceed income, creating a loss that can offset other income. However, hobby expenses, even when they were deductible, could never exceed hobby income. The exam often presents scenarios where candidates must evaluate whether an activity is a business or hobby. Watch for red flags like sustained losses, lack of business records, or significant personal enjoyment without adaptation for profitability. Remember that making a profit in 3 out of 5 consecutive years creates a presumption of profit motive, but this isn't the only determining factor. Here's a practical tip for the exam. When analyzing a question about hobby losses, first identify if there's a profit motive by looking for keywords about business practices, record keeping, and profit history. Then determine the tax treatment based on the classification. Remember that even if an activity is deemed a hobby, the income must still be reported. A real-world application that often appears on the exam involves clients who run side businesses from home. Perhaps they sell items on an online marketplace or offer consulting services. The key is helping them understand the importance of maintaining proper business records and demonstrating genuine profit motive to ensure expense deductibility. The bottom line for the exam is this: income must always be reported regardless of classification. The profit motive determination affects expense deductibility. Hobby expenses are not deductible under current tax law. Business expenses are fully deductible if there's a legitimate profit motive. Keep these distinctions clear, and you'll successfully navigate hobby loss questions on the CFP exam.